Anthony, why are savings and investments so important for the UK economy?
Well, Martin, if you think of the role that the saver plays within the economy, he's a provider of capital, whether he's saving in fixed interest markets or whether he's saving in equity markets. He's a providing of capital to businesses, essentially. He may be institutional, he may be personal, but providing that capital plays a very important role for businesses to grow.
So, OK, savings and investments are very important, but the record, particularly in the UK, isn't very impressive. It doesn't look like we save enough, and it doesn't look like we plan our investments very well. Do you agree?
Well, culturally, over the last 40 years, I would argue, we've changed from being a nation of essentially savers. People were more prudent than they are now. And we've been encouraged culturally for all sorts of reasons. One may lay the blame at banks, one may lay the blame at governments, to consume more and to spend more. So we typically have so much more debt in this country as individuals than we had in the past. Disposable income has an important role to play here too. And there isn't at the moment, there isn't an excess amount of money for people to save. People are struggling for reasons of economic policies, cultural reasons that you allude to be a strong saver as they have been in the past.
When it comes to the savings culture, I mean, what role should the government be playing here? Is it up to the government to try to encourage savings?
Well, the government always has a very important role to play, but the government's role varies depending upon economic necessity. We're going through a period now in 2015 of what's become known as financial repression. The government's requirements now are to maintain interest rates at such a low level that people who have high levels of debt, be they institutional, be they corporate, be they government, and be they retail personal investors, can maintain and pay down those levels of debt without going into liquidation, personally going bankrupt, without having any serious economic consequences for currency, etc. So the government likes to encourage saving, and from time to time will issue investment vehicles, national savings, gilts, whatever it may be.
Limits on ISAs have gone up as well.
Exactly, to encourage investors. But it is restrained, I think, at the moment by the level of debt in the economy. It needs to reduce that level of debt for people to be more, to be saving more.
Let's talk about investment planning. Let's just say I'm someone that hasn't got any experience of investments. I've got the literal blank sheet of paper. Where do I start?
Well, first of all, I'd say it is not as bewildering as it may appear. You know, for the person coming to the investment arena for the very first time, it does look bewildering. But believe you me, it isn't. And the first thing you must do before you consider any investment whatsoever is have a look at what your aims and objectives are. Are you saving for a pension? Are you saving for a house, a car? Are you saving for school fees? And once you've decided what your realistic aims and objectives are, you can then have a look at various investments, the whole investment arena, maybe fixed interest, maybe bonds, maybe equities, maybe property, whatever it may be, maybe vintage cars, whatever you call an investment, and decide and determine through the various models that are available and the promises that are being made to you as an equity investor or as a bond investor, i.e. what's the rate of interest you'll get from that bond, and does it meet your aims and objectives? And if it doesn't, and I think this is a very important point, if it doesn't, then anything over and above that you're expecting is speculative. So it's less about investment at that point and more about, can I say, gambling. And so often the retail investor mixes the two up. He wants high returns, he thinks he's investing, but I would argue he's not investing, he's actually gambling. And let me say at this point, the essential objective of any investment you make is less about the price you sell it at, but the return you get from it whilst you are an investor in that entity. That is the important thing, because the price you sell it at can be determined by all sorts of sentiment. Maybe a euphoric stock market, maybe a very bearish stock market, if we're talking about equities. So that is much more speculative. So I like to think, as an investor, if I'm planning for pension, whatever I'm planning for, what is the return I'm going to get whilst I retain that investment? Am I going to get a yield of 4% or 0.5%?
And the time horizon is critical, isn't it?
Time horizon is absolutely critical, because if your time horizon is too short, then you're going to suffer, or you're more susceptible to the vagaries of the stock market, if I can call you that. What does that mean? You're more susceptible to sentiment, to short-term economic policy, to, well, it can be most things. It could be the weather, quite frankly, if you're investing in the insurance industry. But over the long term, those things are ironed out.